All right. We'll now move on to the next problem in the redemption of debentures. The following balances appeared in the books of Paradise Limited, unlisted company, other than an AIFI banking company, NBFC and HFC, as on 14x1. So the whole idea is we need to create a DRR, right? 12% debentures is 7,50,000. Balance of DRR is 25,000. DRRI investment is 1,12,500, which is represented by 10%. Rupees 1125 secured bonds of the Government of India of 100 each. Annual contribution to the DRR was made on 31st March every year. On 31/3/2, the balance at bank was 7,50,000 before the receipt of interest. What is the receipt of interest? It is nothing but the DRRI interest, right? The investment were realized at par for the redemption of debentures at a premium of 10% on the above date. So we are going to redeem the debentures at a 10% premium. You are required to prepare the following accounts for the year ended 31st March X2. Debenture account, DRR account, DRRI account, bank account, debenture holders account. 5 ledger accounts we need to prepare. So let's open the 5 ledger accounts. 12% debentures, right? DRR account, then 10% secured bonds, which is the DRRI account, bank account, and then the debenture holders account. So we will do in stages. Let's fill up the opening balances first. What is the debentures account? Opening balance of debentures, it is 12% debentures, 7,50,000. So I will say 14x1, it is 7,50,000. That is point number 1. What is the DRR account? It is 25,000. The opening balance of DRR, it is 25,000 given to us in the problem. The opening balance of DRRI is 1,12,500, right? Which is before the receipt of interest. So it is 3112. Okay, which is no. This is 1,12,500. Okay. Bank balance is 7,50,000, right? What was bank balance? The bank balance was 7,50,000 before the receipt of interest. So we'll say 31st March X2, it is 7,50,000. The dates are important. Okay, because he says on 31/3/X2, the balance at bank was 7,50,000. So which is before the receipt of interest. So I'm just saying 31/3/X2 to balance brought down, bank is 7,50,000. I have just posted the opening balances. These 4 numbers, one for the opening balance of debenture, which is 7,50,000, the opening balance of DRR, which is 25,000, the opening balance of DRRI, which is 1,12,500, and the opening balance of the bank, which is 7,50,000 before the receipt of the interest on DRRI. That we have posted. Now, can we first post the interest on DRRI? What is the interest on DRRI? What is the investment made? It is 1,12,500. What is the interest rate? 10%. So 1,12,500 into 10%. Is it not 11,250? It is 11,000. So how did we calculate this? 1,12,500 into 10%. If I calculate this, I will get 11,250. That is exactly what you see in the working note below. Working note number 2, interest on DRRI. It is 1,12,500 into 10%, which will give you 11,250. Now, let's also exhaust the DRR requirement. What is the debenture value, total debenture value? It is 7,50,000. So we need to create 10% DRR, which is 75,000 should be the DRR requirement, of which already we have 25,000, which means we need to create a DRR of 50,000. That is very important. So how did we calculate 50,000? My total debenture value is 7,50,000. 10% is the DRR requirement, which means I need to create 75,000, of which 25,000 is already available. So the balance is going to be 50,000, which I need to create as on the first year. On 14x1, I need to create a DRR for 50,000. This is important. This is the first working note. Look at this. So the total DRR requirement is 75,000. Balance is 25,000 available. So balance we need to create is 50,000. Now, having done that, we are going to redeem the debentures at a premium of 10%. Okay. But for that, we have to sell the DRRI first. So we will sell off the investments at par, 1,12,500. The entry is bank account debit to DRRI. So in the bank account, we'll put DRRI 1,12,500. Okay, so we have sold the investments. Now we have to redeem the debentures. Now what we will do? The debentures is 7,50,000. We will transfer it to the debenture holders account, 7,50,000. So we will close the debentures and we will transfer it to the debenture holders account. Now debenture holders account, we will say by debenture, we will say 7,50,000. And they say we are going to redeem it at a premium of 10%, which is 75,000 is the premium. Right? So the total amount payable is 8,25,000, which we will pay. So when we pay 8,25,000 to them, so we will say debenture holders to bank is 8,25,000. In the bank column, we will say 8,25,000. So what is the final balance which is available? That is the closing balance. It is going to be the difference between 873,750 minus 825. 48,750 becomes the closing balance of bank, which is still available with us after redeeming the debentures. So there are only two major working notes for this problem. One is the DRR to be created, which is 50,000, and then what is the interest on the DRRI. Once we know that, the rest is very simple. Hope it is clear, and that marks the end of the problem.